Good afternoon and welcome to this edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. Coming up on the show today, we'll be taking a look at the ever-popular Soweto Wine and Lifestyle Festival. Then we'll be taking a look at the outlook for the construction company Murray & Roberts. And later on in the show, we discuss a recent McKinsey report highlighting growth opportunities for South Africa, and we'll look at the global growth prospects and what this means for South Africa. But before we get into all of that, do remember that we welcome your comments, so email us. You can send your feedback to moneymatters@abn360.com. But first, part of the week. The JSE's Construction Materials Index is already down 46% over the past year, and with depressed demand in this sector, it is not likely to change anytime soon. Murray & Roberts, who recently reported the results for the year June, has not been spared. Well, I'm joined by Finweek contributor, that's Moxima Gama, to discuss the prospects for the company. Moxima, thanks for your time. So tell us, Murray & Roberts, over the past year, how's it done?
Well, look, financials haven't been really good. So in technical terms, it actually extended its bear trend. It's been down about 41% from the beginning of this year. So it hasn't really done well, though it's quite surprising that it's holding off great support at 11.17, which has held since March. So it seems like there could be a bullish base forming, but it's still early days. But as for what it did for the year, it was still pretty much still in that bear trend, but potential consolidation happening now.
They had their numbers out just recently. How did the markets react to that?
You know, the thing is, the results were a bit better than not better though, it was kind of consistent with last year. So they were bad, but at least consistent. So that for support to hold at 11.70 means that investors are seemingly warming up. They were also kind of rewarded, going to be rewarded for their pain by being offered dividends. So despite them posting dire results again, at least it wasn't as bad or was in line with last year. So that's kind of subdued the whole trend, as I said, with support being kept at that 11.70 mark.
They warn that next year will also be even more challenging. Why is that?
Look, the construction industry is immensely competitive, and they're still kind of marred by that reputation and still paying for being naughty for the price fixing and bribery. So it's probably going to linger on, and specifically with Murray & Roberts, they also have that oil or the mining division, and oil, commodity prices have also been depressed. There's a lot of supply and less demand, so it's most likely to persist. But the amount of negativity that has been put in the construction indices, there are some buyers who find this quite current levels attractive because it's fallen so much. So it is cheap relative to most of the stocks in the index.
So for those buyers who see value in this, or other people that might be looking to see value or any opportunity for Murray & Roberts, where are the green shoots? Where are the opportunities here?
Look, the same with the commodity prices that are really testing lows. There is kind of like a bullish base that's forming. So once that price starts going up, I'm sure that will help their cost structure or increase their profits, because they do have that division. As for the construction side, look, government has got that initiative to increase, but they've been kind of slapdash on it, so it's not something that will hold water. What they would probably rely on is, specifically Murray & Roberts, is an improvement in commodity prices.
Are we likely to see the share price make any ground or improve?
Look, on the weekly chart specifically, the RSI is in a symmetrical triangle, so there's going to be a lot of consolidation, I think, for the remainder of the year. But once it trades above, it needs to hold above 11.70. I keep stressing this 11.70 mark, because if it falls below that, then if you were looking to go long, you probably bought your position there. But above 15 would be a very good sign, as we could then see it head to at least the 30 Rand mark. But remember, you'd be buying in a bear trend, so you'd rather nibble at every resistance level breakout. But 15 would be a mark. I would think at 15, and purely based on all this information and seeing this bullish base, it seems like investors are kind of starting to find it slightly attractive or warm up to it, which is a good sign. But 15 would be my mark. If it doesn't go above that, then it's still pretty much in bearish territory rather. Yeah.
Moxima, thanks so much for telling us about Marianne Robertson, how we should be reading it. That was Moxima Gama. Of course, she's the Finweek contributor. Up next, let's unpack this week's cover story.